Hello everyone, welcome to the latest installment of our e-workshop series. The Microcredit Summit campaign launched in 2013 the 100 Million Project, which is building a movement among financial inclusion stakeholders to take specific, measurable and time-bound actions toward the end of poverty through campaign commitments. This webinar series partners with organizations that have launched campaign commitments and focused on new and innovative ways of working toward the end of extreme poverty. Today, we are co-hosting this e-workshop with the Center for Financial Inclusion, who launched their campaign commitment in 2014. Before we begin, I want to mention that we will be taking questions from the audience throughout the discussion today. If you look on the right, you should see the question and answer section there. Please submit your questions as they come and through that box, and our team will be collecting those and integrate them into our conversation. Be sure you are sending your question to every panelist by selecting everyone in the drop-down menu above the text box. So let me introduce you to Sonia Kelly from the Center for Financial Inclusion, who will be facilitating the discussion today. Sonia, can you start by telling us about CFI's campaign commitment?
Yes, thank you so much, Sarah, and thank you to the Microcredit Summit campaign for your great work championing the work of others. It has been a real pleasure to work with you over the past years as we have joined together in a number of commitments. Last year, this commitment that you see on the screen is the one that we made to pursue this issue of aging and financial inclusion with a focus both on understanding the expensive needs of older people and how older people meet those expensive needs. But while we were pursuing this work, we realized that there was a huge opportunity for institutions to work with clients to better prepare them for older age, and that is the focus of the webinar today. Throughout this project, we looked at both the supply side and the demand side of this, trying to understand what was happening in clients' lives, but also trying to understand how institutions, and especially microfinance institutions, were approaching this issue. And hopefully those two perspectives will come out during our webinar today. But if I could, I'd just like to start with a poll question to make sure that we're all engaged, to make sure that we're all interacting with the software. And this is should be a very easy question. The question is, I know an older person who did not prepare well enough financially for expenses related to their older age. There are two responses you can make. One is yes and one is no. So again, this is a very easy question. There's no right or wrong answer. It just depends on your own personal experience and people in your own life. So I'll just wait a couple more seconds for these answers to come in. I see people are still voting. We have 13 responding yes, 2 responding no, and a few abstaining. And I'll just leave it open for 10 more seconds here. So again, I know an older person who did not prepare well enough financially for expenses related to older age, yes or no. All right, let's go ahead and close the poll. It looks like the vast majority of those who responded agree that they do know an older person who did not prepare well enough financially for expenses related to their older age. This is good news for me because it means that this topic is something that's relevant to almost everyone who has joined us today. So thank you for that response. And this is a very common response that we received as we socialized our research. When we asked people about those in their own life who were preparing for older age, perhaps people themselves or people that they knew, they could identify problems in people's lives, and especially problems with how financial institutions were interacting with people that they knew. However, despite recognizing that this is a very significant issue, Our supply side research found a very wide range of institutional support for clients as they think about preparing for their older age. We polled about 300 microfinance institutions. This poll was also sent out through the Microcredit Summit campaign, and so many of you may have taken the poll. And what we found was just a very wide range of approaches, ranging from engaging with clients for just a few years, so therefore not really thinking about helping clients to prepare for older age, to developing the capacity within the institution itself to provide financial education or even to provide long-term savings products. And then finally, at the other end of the spectrum, to partnering with other institutions who were providing support for clients in their older age. And we'll hear from one of those institutions later. But if I could just take a pulse on who has joined us today, and what your institution's perspective is on this topic. The question is, in my institution's current work with clients of financial services, and if you could look at this poll question and try to answer as honestly as you can. I know that I know 4 responses may not be enough, but hopefully you fit mostly in one of these. The first response, A, is the issue of preparing for older age never comes up, and I don't think it's something we will ever consider. The second, B, is we would like to help our clients prepare for older age, but we either don't know how or don't have the resources to start. The third response, C, is we are starting to implement initiatives that will help our clients to prepare for older age. And the fourth, D, is that we actively work to prepare our clients for their older age. I know this one is a bit more complicated than a simple yes or no answer, which was our first poll question, so I'll wait for 15 more seconds to see what the responses are. And while we're waiting, I'll just mention that the report that you see on the right side of your screen is the report that much of what we're talking about today is based on. You can find that report on our website at the Center for Financial Inclusion. So let's look at the poll results here. It looks like the top response is B, and that was that the institutions that are participating in this call would like to help clients prepare for their older age, but either don't know how or don't have the resources to start. The second highest response was D, we actively work to prepare our clients for their older age, and I would be interested in perhaps hearing from some of those institutions as we move forward when we do get to a place where we open up for responses. So moving to our panelists, I will just introduce our first panelist. Epu Mekonnen-Jeanret is the Policy Director at HelpAge International. Epu has worked on social policy and population dynamics at national, regional, and global levels for 15 years. She has regional expertise on the transitional economies of Southeast Europe and Central Asia. Her work centers on social protection, health, human rights, and gender in the context of aging, with a special interest in how informal labor markets transform income strategies through the life course and the role of older women as transformative agents and poverty reduction in later life. Epu just shared with me recently that this issue of aging and financial inclusion is becoming increasingly important in HelpAge as they think more about how to best prepare people for their older age and how to best equip older people to meet their expenses needs. Hello, Epu, can you hear me?
Very well, thank you so much, Sonia, and good morning, Sarah, and everyone else online as well.
Perfect. Well, Epu, let me just open up with a very basic question, and that is, could you describe for us what is happening in the world in terms of aging? So when we talk about preparing clients for older age, how big is this market we're talking about? What is the context for this discussion?
Well, someone a few years ago at the UN was saying that the two mega trends for this century are aging and climate change. So it is something that is really changing our societies globally. I think aging is often seen as something that happens in the OECD, on the developed countries, but really it is a trend that is happening everywhere in the world, and that is really because of success of development. So we have had huge advantages in terms of health and education, women's labor market participation, and that has led to a decline in fertility. And when the fertility declines, populations tend to age. So for example, if we look at 1960, which is not that long ago, the global fertility rate was 5 globally, and the total population was 3 billion. Today, the fertility rate globally is 2.5. It's halved, and the population is 7 billion. So there's massive structural changes taking place. And when it comes to aging and looking at aging populations, at the moment, we have about 800 million people who are over 60 globally. And in just 15 years, that's going to increase to 1.3 billion. And really importantly, 60% of those people live in a low and middle income country. So it's far from just being a kind of OECD or developed world issue.
Thank you so much. Thank you so much, Epu. Can you talk a little? You've told us about the scale. You've said that there are 800 million people now who are over the age of 60, and by 2030 there will be 1.3 billion. It says on the slide that we're looking at. But can you talk a little bit more about, like, what is older age? How do we define older age? Sometimes we talk about a specific chronological age, but I know that that is not always the most descriptive. Can you describe that a bit more for us?
Thanks very much for that, Sonia. Really, that's the crucial question often, what is older age? And it depends who you ask. So we are looking at a transformation that has never happened before, but then when we start to define that, if you ask the WHO, they will say older people are people over 50. The UN would set that at 60. If you look at national level, people often define what is old by people's pension entry age. So that varies from, for example, Russia, women formally retiring at 55, Norway discussing a retirement age as 78. Big diversity. And then, crucially, individuals rarely self-identify. So I've said this many times before, but when I have been working with groups of older people through our work, especially in Central Asia, I have been talking to people who are in their 70s and 80s, and they talk about those older people. And they're referring to those people who are immobile or have lack of freedom or who live in poverty. So there's an association there. And I think this is really important. What is old is often very closely linked to social norms. So there's no biological marker that relates to chronological age. How we age is very diverse and is entirely dependent on the intersections of gender and disability and socioeconomic situation. Everything that happens through our life course accumulates in later life. So it's incredibly diverse. And in terms of looking at what is old, I think it's sometimes more useful to look at transitions. So certain transitions in life are linked to stages of life. For example, retiring or becoming a grandparent or your spouse dying. And a lot of these transitions are postponed. So in a way, we are getting older later.
Thank you, Eppu. And as we think about how to best prepare clients of microfinance for their older age, can you discuss a bit more what the existing strategies are that people are using to prepare financially for their older age, and are these strategies working? I'm going to ask Sarah to put up one of the figures that we prepared for this today so that you can talk through it a bit. It's, for those who are on the phone, it's a figure from the paper, and if you have the paper in front of you, it's figure 18. And Eppu, before you describe what the existing strategies are that people are using and whether they're working, this is a good time for me to remind all of those who are with us today that if you have questions, you can feel free to type them into the chat box and make sure that you can send them to all participants. Questions either for Eppu or questions that you want all of us to consider as we move through the webinar. So Eppu, if you could walk us through the strategies to cover old age expenses and whether they're working.
Sure. Well, we know three things, and the first of those things is what we see on the slide here, which is that income strategies, as we plan them for older age, don't always materialize in the way that we plan them. So there is discrepancy in terms of what we think will happen and what actually will happen. So when we looked at this in Colombia with a group of people who were over 60, this is the orange color, and under 60, which is the blue color, we saw that younger cohorts were expecting that savings and work were going to be the main strategies for income security in old age. However, when we talk to people who are over 60, their income strategies are mostly leaning on family and government pensions. So there's discrepancy there. We know less about the detail and why, but this is really important to understand. The second thing is that strategies for income security are very diverse and they are fluid. So there's nothing static about it. So we will have a mixture of pensions, we will have family and friends, of course work, and this is often informal in later life. There's small business, accumulating assets, and savings, of course. So there's this whole mix that then this mix is responding to different situations, whether it's health shocks in the households or perhaps to shocks to livelihoods, could be drought, could be floods, loss of assets. So it's very fluid. And the third thing that we know that there is quite widespread exclusion of older adults from income supporting strategies. So we saw really clearly when we're looking at the material for the report and thinking it through that there are lots of age caps that are implemented at various levels, on whether it's access to microcredit or whether it's access to livelihoods inputs. This could be seeds and tools or training. So there's a lot of ageism on opportunities. And actually we know another thing, the fourth thing, which is that we know very little. So data is very poor on later life and productivity on later life. So if you look at the internationally comparable available data sources, they tend to stop analysis at about 60 and sometimes even 49. And labor data, which is really important for understanding livelihoods and income strategies, it's pretty much non-available for people over 65. And the problem is that while we know that people keep working, we're looking at low and middle income countries, there's often no choice, and work tends to be part of the income strategy mix as long as possible. Maybe people work less hours or the type of work changes, but people do stay engaged in labor market somehow often. However, we are really missing all the really important nuance. So we're seeing this black and white picture or the kind of frame, but we haven't colored it in. So in terms of data, there is a big opportunity and need to improve that.
Thank you, Epu. We received a question from one participant, Imran Inam, and Imran says there are serious challenges in order to provide financial resources to older age people. So what can we do for them? And this comment is something that I've heard quite a bit as I've talked with financial institutions, especially microfinance institutions. Epu, one last question, and I think this question is the most challenging, but most of your work, Epu, is understanding what older people's needs are in societies, kind of broadly. And what is one thing that you wish financial services institutions would remember as they interact with older people, but also as they interact with their younger middle-aged clients to help those clients prepare for their older age, recognizing that there are challenges to working with older people that microfinance institutions face. What are your thoughts on this?
I would say that at the moment there is an unprecedented opportunity. So we are currently still held back by these really outdated, incorrect stereotypes of what old is. So like we said earlier, largely what is old is a social construct. So our social norms are lagging behind. The world has changed. Our health situation, education, human capital is improving constantly. Every cohort is better educated and healthier. So to achieve financial inclusion as a strategy to really tackle poverty, it will not work if we are leaving behind population that will soon constitute 20% of the total population. So I guess the final message would be understand older clients just like you would understand any other client. So age-proof institutions, understand the demand. We have to talk to people and see what it is that they need. And we do have to accommodate changes in mobility or vision or ways that we introduce new technology when we look at older adults. And also looking at ensuring appropriate client protection. But it is just moving forward and being the change.
Thank you, Epu. One thing that you said really stuck out to me, and that was our social norms are lagging behind. I think that is true in microfinance probably, but also true broadly speaking. We did have a question about older people and work. Epu, I know that your work, both as you think about financial inclusion and beyond, deals with labor markets and how to approach the question of work and older people, recognizing that one-size-fits-all retirement ages are probably not appropriate. So how do you approach this issue of older people and work?
Often it goes, how would I put this? Working in older age should be a choice. So if people want to work and carry on working, they should have the right to do so. And in order to achieve that, there's some policy implication. For example, mandatory retirement age in the formal sector is really not necessary. But as you say, often the work is in the informal sector. And this is in terms of development, there's a big gap in information and data. And we're just looking at this more and more when we're looking at the kind of economics of aging. Because a lot of the work that older people do, especially women, is not counted. So it could be unpaid, informal, it could be care, and this is going to be an increasing component as populations age. Caring for children, for disabled persons in the family, or the oldest old. All of this is enabling other household members to engage in the labor market and therefore allowing them to work. So the picture is more complicated than the current analysis.
Yes.
Recognizing the complex labor structures in the context of family, I think before we move on to our next panelist, Epu, I just would love to ask you one more question, and that is this one from Beryl. What is the influence of changing family structures on support from family and friends as a strategy? This is one of the strategies that you talked about, people who are under the age of 60 not anticipating they would need to rely on in Colombia in the survey that was given, but people over the age of 60 needing to rely on as one of the top strategies. So how do changing family structures affect this, especially in the context of labor markets and thinking of who earns an income in the family?
This is changing really quite fast, and I think dynamics like migration are affecting this a lot. So we are seeing an kind of increasing number, of course, of people moving around. Mobility is increasing. So remittances, being able to have access to remittances is increasingly important for those who are staying behind. It is often older people, and it's often the grandparents who stay behind with the grandchildren. So the transfers are really for the whole family. But then slightly differently, I just saw some data last week from the Oxford Institute of Aging that is looking at the transfers going both ways. So transfers going from the kind of younger to the older, but also often at the same time, there are also transfers going the other way, so the older generation supporting the younger working age population. So like with many things, the whole kind of mobility, migration, and more complex labor markets, the picture is not getting clearer, it's getting more interesting though. And I think the changes in the household structure need to be very central to the conversation around income strategies for all age groups. I think we need to focus a lot on households.
Well, Epu, there is one thing that you were very right about, and that is that this is certainly not a black and white issue. With new research that comes out, I'm always a bit surprised, and my own framework has to be adjusted accordingly. So thank you so much, Epu. Now that Epu has set the context, I'd like to turn to our other panelists so that we can talk a little bit more concretely about what microfinance institutions can do to better engage with this issue of preparing people for their older years. Our second panelist is Parul Khanna, who is the Associate Director for the Micropension Lab. In her current position, Parul leads new projects at the Micropension Visa Payments and Inclusion Lab. She is responsible for strategic and business partnerships involving corporate social responsibility and fostering larger public participation in the process, as also for developing and field testing innovative IT-based platforms and strategies for upscaling low-cost and convenient access to integrated financial solutions by low-income excluded individuals, including tribals, transport workers, self-help group members, and domestic help. So certainly a broad range of people that Parul works with as she engages in partnerships. Before we turn to Parul, I want to highlight one of the observations that came out of the World Bank Global Findex released last month that gives us a look at demand-side data on financial inclusion. I think often we think, oh, well, people who are poor don't save for their older age. They don't have the capacity to do so. But what we know from the Global Findex is that 24% of adults say they have saved for old age in the past year. This is 24% of all adults in the world. Among the base of the pyramid, 18% of people still say that they have saved for older age. While this is lower than the top of the pyramid, the top 60% of population, this is certainly was a surprise to me to learn that people are saving for their older age. Whether they're doing so in safe and secure mechanisms is another question that perhaps Parul can talk us through a bit. But Parul, if I could just open with a very easy question. Can you tell us a bit more about the micro-pension model and what you're doing in India?
Sure. Thank you for having me here, Sonia. Well, what we do is, if you could just actually first pull up this one map of India that I have in one of my presentations. What it essentially talks about, and I'm just talking about the pension coverage in India. Is it up yet?
Yes, we can see it. This is the micro-pension impact footprint.
Yes, this is actually a grassroots representative, and I'm just trying to represent what the problem in India really is. When we look at the green band, this is talking about the lifetime poor who would never be able to save in their whole life. And the orange band is what we're talking about, the informal sector workers who have some capability to work. The white band is of people who are above the age of 60, so they're already either they're above or they're either above the working age or already retired. It is only this blue round in the middle, which we call the chakra, is what represents the number of people who actually are in the formal pension. So we're essentially looking at all of the population, the rest of it, which is in the informal sector workers, which does include doctors and includes farmers. So everybody is not getting a formal pension. And only 7% of taxpayers in India actually contribute to the rest of India. So clearly, taxations or formal pensions or social security is not the way forward. We're really looking at self-help and thrift for everybody in the nation to be sustained. And considering we're a nation of 1.2 billion people, we really need to work fast because we're working on a young population, but 30 years down the line, we will have a much older population and adding to it. So we need to work fast on it today. As you correctly pointed out, Sonia, we have, I agree with you that it's not that the poor are poor and they can be categorized as poor. They also have middle class poor, upper class poor, poor, and out of those there are savers and there are dissavers. So it's not fair to say that all poor people are dissavers. There are people who want opportunities but don't have them. If they have the opportunities, are the correct ones or not is actually what I would debate. In fact, I would say people who have limited means are perhaps smarter with money, because I feel the auto rickshaw driver knows how much money he has in his pocket every day. Perhaps he wants to get a drink in the evening, I don't know, but I don't know how much money I have in my pocket right now, or for that matter, whoever is on the discussion today would know exactly how much money they have in their pocket. So the income group that we're talking about actually is very smart with money. However, when they look in deeper, old age pension is something that may not intuitively come to them, or the word retirement doesn't intuitively come to them. Things like building a house or having some tangible asset was something that will come to their mind. But retirement is still sitting at a very limited children, God, government, and fate kind of a retirement portfolio, which could be a very weak portfolio. So what we are trying to do at micro pensions in India is to actually come up with an integrated solution of how we can approach this problem where the footprint on financial education has to be very strong. So if you could just pull up slide number 9 for me, I will be able to explain the micro pension model more clearly. Essentially, a lot of importance has the importance of old age savings. What happens today is that if we have a health shock or if we have some emergency of any kind, our intuitive action is to actually go and borrow money from someone. What this income actually is about is that there is a way for you access financial services where they should get them from. B, why it is important for them to have those products so that they know that if they have a health shock, they have a medical insurance. They know when they get old, they have pensions. So they don't have to face those kind of problems. And I'm talking about the people who are currently in their slightly younger age. People who've already gotten to their 40s and 50s have to have a different strategy. But on the whole, financial literacy for all these people in this income group is essentially important. So we pay a lot of importance to that, and we create government-led products that we onboard them onto. One of the other challenges that are in the ecosystem, and one of the other pieces is, once the person has understood what the scheme is and they've decided to join in, how is it that they're going to make contributions month after month, year after year, with a relationship with the pension product which is over 20 years? And the 20 years are only of putting in money, so it has to be habitual. And the next 20 when they will withdraw. So actually a pension product is what somebody has the longest relationship with in the financial services. So payments have to be something that has to be very easy for them. If it's going to be cumbersome and the bank is going to be some 20 kilometers away, that could be possible in geographies like India and Africa, where the person has to trek and give up their daily wage and walk to the bank, and the bank manager is not really interested in servicing them, is something that we try and do away with and come up with solutions that are more closer to their doorsteps. And the third thing that we do is services and benefits. The way you and I and everybody here has a bank manager or a wealth manager which does all our banking for us, why should this person also not have the same kind of services? Which means that they have somebody to speak to. They could just pick up the phone and speak to and say, you know, how much money have I already saved? I can't put money this month. I can put in next month. Or my address has changed. I need the statements to come somewhere else. Or that we've had a shock, somebody's passed away. So where is that redressal for them? Where is the customer servicing for them? So that is something that we also do in terms of claims, information, redemptions, complaints, and so on and so forth. So that is one of the other things that I do that we do with the micro-pension model. And this model is we try to spread it across the board, trying to work with MFIs, NGOs, community-based organizations, where there is mass integration with the people.
Thank you, Parul. I think that your model is very fascinating, especially given the conversations that I've had with microfinance institutions. Many microfinance institutions I have talked to have said, well, we'd like to do something to help clients prepare for their older age, but we just don't have the capacity within the institution, or we don't have a long enough client relationship to be able to build up trust. And so I think the model that you offer, partnering directly with microfinance institutions and providing channels and financial education for existing clients of institutions to save long-term in a safe and secure place, I think this is just a really needed model in our space. If I could quickly go to one of the questions that was asked by one of our participants, Luis. Luis asks, what are the key messages to deliver in a financial education program to foster the adoption and use of a micro-pension product? How do you approach the question of financial education, Parul?
That is a really, really good question. It is, if you're asking me the two-pronged questions, is A, how do you approach financial education, and second is what is it that you actually say when you meet the people. So why I'm bifurcating the two is once you have to get people, which is a huge challenge, what you don't understand is on the ground to mobilize people to come in for a classroom session for financial education, which is something that they don't comprehend. And second is what is it that you're going to say to them in a way that will keep them inside the classroom before I even get to the curriculum. In terms of strategies to create a classroom environment, microfinance institutes and NGOs and community-based organizations play a huge part in this, because the trust factor of already those people in the community is with these people. So they understand that whatever that is being done for them is for a good cause, and hence mobilizing through the local partners on the ground becomes imperative. The second part in terms of curriculum for the customers has to talk about the security of their money first of all. So approaching old age by saying that, you know, this is something that will come to you and we're trying to show you a crystal ball and this is what your state could be, good or bad, if you don't do something about it today, is something that we actually avoid upfront. we try and tell them the good things first before we are able to, sort of scare them off with what they may not be looking very pretty when they get older. Things like how money grows, how money can be secured, how people should move away from cash and try and digitize their money in terms of banking, technical concepts like compounding, variable returns, inflation, how there are government products which are more secure than there could be the Ponzi schemes that all of us have been through, benefits of pooled-in products such as insurance and co-contributions. What is it that what kind of documents will they require if they do decide to enroll? How will they have access to their money? How will they make the payments? Will there be ongoing services? How will the claims flow back to them? And all these things need to be done with very smart literacy tools on the ground. So that is one more thing that we try and work with them on. I hope that answers the question.
It does. One conversation that you and I have had, Parul, is about these tools, the financial literacy tools. And I was wondering if you could talk about one in particular that you and I have discussed, and that is the fortune teller tool. Could you talk a bit more about that? I think that's a very interesting delivery model for financial education.
So one of the things that we do is what we realize on the ground is, and like I said before, is that if we try and show them a crystal ball saying that this is what your bad state or not such a pretty picture could be, when you're at age 60, people don't want to see it. Or I'm sure even in their villages or in their areas, they see somebody who's not had a very dignified old age, but they look at them and say, okay, this could be me, but they don't feel that it's me, it's for someone else. What we try to do is approach them in a little different manner and say, why don't we talk about your financial health? And astrology with all of us, especially in India, is very, very strong. We all like to go to our tarot card readers and face readers and palm readers and some sort of astrology or stars or whatever. And we said, okay, fine, why don't we bring up the concept of a financial astrologer? You come into us, and we will put in your financial health into a software, which is the astrologer software. And out will pop up these pictures that the astrologer will tell you, some good, some not so good. That could be when you get a little older, or whatever your short-term, medium-term, or long-term plan is. And what is it, what kind of remedies could you do today to actually reach those goals or overcome the limitations that you may face going forward? What we see is people latching onto this as a very personal agenda where, say, even for that matter, a couple, a male and a female, want to go to the astrologer independently and figure out what is it that their financial health could be and together. So this is one tool that we see work very well on the ground, actually.
That is so fascinating, Parul. Thank you. I think that you've brought a poll question to help us with our financial education, those of us who are participating. I'm going to put it up on the screen here. Would you like to introduce it?
Yes, I most certainly will. Okay, so please be honest when you read this question. It says, if you're at age 25 today and you wish to receive a pension of $412 by the age of 60, how much do you think you will have to save each month today? Will it be $8, $28, $38, $58, or $108? It's a little intuitive. Let the power of compounding come and play, but let's wait and see what people have to say.
I think this is a great question for those of us who are participating, because many of us work in financial institutions, work in microfinance, or are adjacent to the financial sector in some way. But I know in my own life, I think I certainly do not have the answer to this.
I want you to make a guess as well, Sonia. I'm going to ask you your answer as well, independent of everyone else.
Okay, it looks like the answers are still coming in, so why don't we give it 20 more seconds?
Okay.
This is not like the other poll questions that we have introduced. This one actually has a right answer.
Yes, it has a right answer. It does.
Now, Parul, for my own calculation, this is in U.S. dollars. Are we assuming this is in the U.S. or are we in India? I'm trying to calculate the inflation rate in my head.
I took it out in India, but I converted it into U.S. dollars. But 412 U.S. dollars, even in the U.S. is, is decent.
All right.
So, but I did calculate it in my Indian calculator, my astrologer calculator.
Oh, your astrologer calculator, exactly the tool that we were just talking about.
Exactly the tool that I use.
All right, great. Well, it looks like we're going to close the poll. The number one response was A. The number two response was B. And then a few people guessed D and E. So it looks like we have kind of a broad range of responses here. I think for myself, I would go with B. But again, I'm not confident about my answer either. So Parul, please tell us what the right answer is.
Well, the correct answer is $8.
Wow.
And what the baffling number is, Sonia, that the corpus amount that you would have accumulated by 860 would be $50,000. So if you accumulate just $8 a month, which is $96 a year for the next 35 years, even if you're 25 today, you only save about $3,360 in real terms. However, with compounding, that amounts to about $50,000. Is your corpus, and your pension amount would be $412. So this is how compounding and small amounts of saving, but in a disciplined manner, which create a behavioral pattern, could lead to a much secure and dignified old age that we can even imagine, just small actions today. So what we actually tell people is, please don't give up smoking. We're not asking you to give up smoking, but what if you can give up that one cigarette a day? Maybe you can give up 1 cup of tea a day. This amounts to 6 rupees or 3 rupees. And if you do that every day, you will have the 300 rupees to save every month is what you need for your old age.
All right. Well, I wish I could go back and tell my 25-year-old self that if I only save $8 regularly, I would have this much of a pension. And I'm sure it's dependent a bit on the context where you are and what the interest rate is.
Correct.
But this is really interesting and a good lesson that that by focusing on small, very concrete lessons for people, we can really increase financial literacy. Parul, if I could switch gears a bit, we received a question from one of our participants, Miranda Bashara, and that question is, how can we best coordinate and partner with governments on micro-pension schemes, recognizing that in many countries, pensions are controlled by governments? I know that this is the case in India, so I hope that you have some insight on what are the ways to partner with governments?
In fact, the government, as far as I've seen in the governments that we work around in the developing nations around India and in India, is that they have one pension scheme which is for the formal sectors, and they try and introduce either defined benefit or a defined contribution scheme for the informal sector workers, because the cost of giving everybody a universal cover is far too expensive for at least nations like India or Indonesia or Rwanda or even South America. So they try and do a defined benefit or a defined contribution scheme. How we partner with the government or anybody to partner with the government is that these schemes are actually available as through aggregators. In several nations, the aggregator definition could vary from each nation. The word could vary, but the definition remains the same. So that person is authorized by the government to take the scheme to the rest of the nation. And that aggregator then appoints people on the ground. Those could be MFIs or partners like us or community-based organizations who then take these schemes ahead to the informal sector workers. Usually these schemes are also available with banks, but only in those nations where banking is strong. or coming up, but where banking is not strong, this can be a challenge. So this is the way forward for anybody to integrate with the government schemes. However, there are other ways of engaging is through NGOs as well, because NGOs can also obtain licenses like the MFIs, like I said before, where you can integrate and take up these government schemes. And we advise that with countries, nations in our, as a pension policy for other nations as well, to take it throughout their nations.
And I know that beyond India, even if in a developing country the pension scheme is run through businesses or run through commercial banks, the government still plays a large role. I was just speaking last week with the pensions regulator in Mexico, which provides the switching system so that informal sector employees can contribute to their pension through a 7-Eleven store or through a small kiosk, essentially, in the same way they would be able to top up their mobile. So certainly this is something that's on the radars of governments in both countries where the pensions are run by the government or countries where pensions are run by businesses and commercial banks.
Correct. And those are the outreach or access questions, where how is it that the person can latch on to and make contributions month after month. But for an organization to integrate with a government scheme would require big MFIs or, like you said, bigger organizations or commercial banks to latch on and bring the scheme to the informal sector workers. There's one more thing on the MFIs actually playing a larger role in all of this, Sonia, was like I think we've spoken about it once before by saying that the MFIs can actually play a really large role in bringing pension products to the people on the ground. And one of the strong points with our experience is that have the experience of selling financial products. Very processed. They know if something is happening in upscale is very quick. They have the ability to deal with the poor officer and those poor officers, selecting them who know who can save. And why this works in the favor of pensions is because the dynamics of behavior for persistency can be brought to contributions, can be met through their clients because they meet their clients at least once a month. So the reminders and readjustments and saying that you should save month after month is very good. So MFIs are potentially good partners, and the trust that the customers have between the MFIs is actually very strong. We work with Janalakshmi, which is one of the larger MFIs in India, and it does very well. In terms of things that don't go very well for an MFI, like you correctly pointed out before, is that there's a 10-year mismatch. So the loan cycle is only for 5 years, but the customer needs the services for the financial product for at least 20 years. And to reach commercial viability, the microfinance institutes need to actually create an ecosystem to service these customers for that long. That could be training and certification of field staff or high-quality financial tools or payment solutions or customer redressals, IT solutions. They need to create this ecosystem. So unless you're a really big MFI, economies of scale are not going to take effect, and it's going to be far too expensive to have in-house, because the margins in a pension product for an MFI to make any sort of earnings is very low. Unless you're a large MFI, it could be a challenge. But however, what we've seen is if we just step away from the MFIs and try and go to some kind of a community-based partner, that could be, say, we work with the tribals, like I was saying. There's a community-based organization called Center for Tribal, Rural and Development. They work on livelihood, they work on education for children, they work on health, and they work on pensions as well. So we've seen that those are the people who tend to work on pension products more securely and but for a longer time. However, it is very expensive to do a community-based organization, because we have done it and it worked very well, but it required a lot of money to be pumped in. So the government, why I'm trying to say that is that the government also needs to put in money into general awareness, whether it's in an MFI or a community-based organization for the low-income group.
Thank you. And this begins to answer a question that we've received from one of our panelists, Pranav, which is how can the private sector play a role in creating these kinds of schemes, at least in their catchment areas? What support can government provide, and do cooperative credit societies have a role to play? I would love for you to think about that question, Parul, but before you answer it, you did bring a video today, and you mentioned livelihoods a bit, and Micropension has a specific program that's trying to capture domestic workers, and I think that it's a very creative program. So I'd love to show the video if that's okay, Parul.
Sure.
Great, here we go.
मैं 24 साल हो गई यहाँ गाड़ी साफ करती हूँ, कोटी में भी काम करती हूँ। तो पहले मेरा गुजारा नहीं हो रहा था, बहुत कम पैसे मिलते थे मेरे आदमी को, इसीलिए हम दोनों सोचे कि 2-4 गाड़ी साफ करें। अब करते करते 26 साल हो गया। इन्हीं दोनों में मेरे बच्चे बड़े हो गए, मैंने पढ़ा लिखाया। मेरा बेटा तो अच्छा है, मॉल में काम करता है, फिर भी मैं उसके ऊपर बोझ नहीं बनना चाहती। मैं अपने बुढ़ापा के लिए माइक्रो पेंशन ले रखी हूँ, मेरे बुढ़ापे का काम आ जाएगा ना। मैं भी एक गाड़ी सेकेंड हैंड गाड़ी ही खरीदूँ, तो मैं भी ये सोचती हूँ कि मेरे लिए कोई गाड़ी साफ करने वाला मैं भी रखूँ। सबके लिए करती हूँ, मैं भी सोचती हूँ मैं भी करवाना चाहती हूँ।
That video always brings a smile on my face.
Thanks, Parul. Can you talk a little bit more about how this gift to pension program works for a domestic worker like this?
One of the communities that we tried to target in India was domestic workers. There are about 40 million domestic workers in India, and that is almost the same as the population of Canada. What we were trying to do is that this is one community which makes a lot of money month after month, or at least a decent amount of money month after month. However, their years of working are limited, especially in the case of women. There is no one place or one union where we can find them because they're working in different households across the country. And access to financial services is very limited for them. So the one way and a secure way of trying to reach out to them was we thought through people like me and others in India who are employers of domestic help and say, why don't we tap them to see if they want to be able to give a social security to the employee, which happens to be a domestic worker in this case. The model works quite simply. It's an online platform. It's called giftapension.com, where it works in 4 steps. First, we request the employer to educate their domestic help, and why it is important to save. And we give various tools online which they can play with, including a calculator, which I used to bring up the question earlier as well. And what the scheme details and how. And once that is done, we feel that a lot of the second step, I won't jump over, that they fill in a form online, which is very short and intuitive, and they make a payment online. Once the payment online is made, this is where on the drawing board all of us had got stuck and say, okay, now what do we do? Because if we're going to wait for the domestic employer to courier the packet or do something or send the forms to us, because we still need physical forms in India, then we're going to lose the plot because it's not going to happen. So what we actually did was we played an eBay on them. Exactly the way Amazon or eBay work, that's what we did with them. So we said, okay, fine, we will have couriers sent to them at their doorsteps with forms filled in. And all you have to do is make them sign and paste a photograph and put it back into a pre-addressed envelope, which they can just give us a missed call or send us an email, and we'll have the packet picked up from them. This tied the enrollment of the domestic help end to end. The advantages it has is that the employer does not have any incentive for a missell. So they will do it for the right reasons, and only if they think that it's something that is worth doing, they will do it. So there is no miscommunication, there is no missell, there's no oversell, there's none of that. The second thing is, because the employer is filling in all the details by themselves online, the errors are very less. Now, that is one thing on the ground, or the field staff or people who work on the ground, or even on this panel will say that if the forms need to be filled by hand, even if I write my name 50 times, I will make a mistake. So that tends to be a huge deterrent for enrollments not happening. And since the payment is made online, it ensures that the customer is onboarded onto the scheme. The advantage of this is, Sonia, that, and for the benefit of all the listeners, is that the model works online and offline. So if I am an employer who wants to continue to save and put money on behalf of my domestic help, then I can keep doing so online month after month, or even put in a standing instruction on my credit card. But if my domestic help leaves me and starts working for someone else, and I wish to discontinue to give the pension to her anymore, and she goes to another household, but that employer says, I don't want to give you any money, the model works offline. So pretty much the way, Sonia, you were saying it works in Mexico, where there is a switch, they can go to the local shops, which is like a 7-Eleven or a small-time shop that sells cigarettes, basically where they get their mobile recharges, because all of the population, at least in the informal sector workers, are on a prepaid mobile phone, so they're used to doing new mobile recharges. Is exactly the same shop where they can go and recharge their pension accounts as well. So, and there is a helpline in place which talks to them every month. So we call up each one of our customers and say, you have your contribution coming around, this is the amount that you need to save, or this is the amount that you have already accumulated, or you haven't put in your money, can we direct you to a place where you can go and put in your money? So it works in a very secure manner, and there's no cash involved, so there's less fraud that happens. So we're seeing a lot of, and it works on government schemes, and we also not only give pension, but we also offer life insurance on gifttopension.com.
I'm very aware that it's 11 o'clock. Parul and Epu are willing to stay for an extra 15 minutes, and we have quite a few questions that have come in. So we are going to extend the session a bit, but we understand those of you who may have other things to do.
Sure.
One, I think that this issue is a very interesting one, given that it requires financial education, and it requires convincing people that it's important to save for their older age. It's very, in the same way in the health field, it's very difficult to convince people to take a vitamin every day. But when someone has a headache, it's very easy to get them to take an aspirin. And so in the same way, sometimes saving for old age can be like getting people to take a vitamin every day. And I think there is a great challenge in doing that. So
there is, Sonia, but you see, because there are micro savings and if the whole process is not easy and the education is not done well, it can also be like going to the dentist. So that's why that's why financial education and access has to be a part of policy decisions by the government. A public and private partnership needs to come into play. The partners on the ground need to be more proactive. It's this whole ecosystem that has to work. It's not an either-or situation. Everybody in the ecosystem needs to do their part to enable that one life. And we keep worrying about, we have so many people who are poor. If I even take the India context, so many people who are below the poverty line, or so many people who are disfavored. But even if I just look at the 40 million domestic workers I have in India, the whole number is huge. But if I decide to do this on a one-on-one, and I decide to take care of one life, and Sonia decides to take one, and the MFI decides to take lives, and NGO decides to take care of 20, we can do 1 million people by the weekend if we want. But it is just the good quality education and access and servicing, all three ingredients at one point, and of course at the policy level and the government, a micro product that needs to be made, be it for pension, be it for medicine, be it for insurance, is a very integral part of all of this. In fact, I have this very interesting story. I don't know if you have the last slide on my presentation, which is just a picture of an animal. Yes, it's called, why I say, and this is one of my favorite stories, is, if you give me a minute to share, Sonia, I'd love to share this story.
I give you permission to share. Please go ahead.
So we have this one customer who's actually a tribal of a primitive tribe in south of India, which is of African descent. So they visibly look very African. They were just introduced to micropensions, and this is 3 years ago. And I was very impressed because month after month she was saving money. She was not defaulting. Every year I would see a corpus in her account, and I was very impressed. So when I went to meet her, and I said, "What is the secret of you to actually be able to do this?" And she says, she pointed out to her goat, and this is her actual, by the way. So I said, "A goat?" So she says, "Yes." I said, "How can this be your retirement?" So she said, "Every year I rear a goat for my pension." I said, "How is that possible?" So she says, "Every year during Eid, I just prepare my goat and go and sell it, and that's my pension goat. So I have regular contributions." I said, so I said, "What about, how come you are able to increase your money each month?" So she said, "Well, that's also not a problem, because this year I sold the goat for 3,000 rupees. Next year, the year before I sold it for 2,500 rupees. And the year after I'm going to sell it for more." So she's inflation indexed. And I was so impressed with Shameen Bano's answer, I cannot tell you. So what I'm really trying to say is they're much smarter with money than we think, Sonia. They just need some sort of cushioning that all that will really help them with.
I think that speaks to one of the questions that we got, which was from Badur Hayari, who says, "People in our region would prefer to save for a short period of time for short-term goals. They will just say, I don't guarantee living to older age." But I think we do see some examples of people saving for their older age in ways that may not look like a traditional pension. And so trying to build products that fit people's needs and do so in a secure and safe way, I think, is really important. I would like to...
just one thing, Sonia. This is like a answer to this question. Yes, people on the ground do want to save for old age. They do want to save for the child education, marriage, buy a home, and have some emergency endowment product. But the catch-22 situation is, Sonia, that if these things are not taken care of, whether they're medical insurances or medical emergencies, well, the first thing that they stop saving out of is a pension product. So any shock will make them stop saving into a pension product. That's why financial literacy is important, a bit of both of everything. You cannot park all your eggs in one basket. But the importance of old age education has to be instilled, or old age savings has to be instilled alongside all the other products that we're talking about.
Yeah, and it's clear that there is momentum behind this idea of saving for older age. We have one participant, Robin Lavrelot. I don't know if Robin is still with us, but Robin is looking for a consulting firm to help develop a micro pension product. So if there is anybody who is on the line who knows of one for Robin or can help her to find one, please let us know and we can connect Robin with that resource. And Parul, we'd also love to connect her with you as well after the call. But if I could just turn back to Epu for a minute, as we've been talking in the last half hour about how to best empower clients to save for their older age, we did get one question that came in from somebody who asked, what can we do for clients who are already 60? I mean, obviously, this is an issue, preparing for older age, and there are a lot of people in the world who haven't done that. And so, Epu, what advice would you offer in regards to that question? How can we approach this issue of financial inclusion for people who are older?
Follow that. In terms of people who are older today, however we define that, I think there are a couple of things. The first thing is that we will have to look at mixes of measures. So there's a lot that can be done through kind of private services and citizens, especially when they're younger. When we're reaching the older age, we're going to have to also take perhaps more into account the public transfers, which tend to be old age pensions. So I think the role of social pensions really can't be underestimated. So without a regular and predictable income, people often cannot plan ahead and take risks. So when we're looking at countries that have very big and deep poverty levels, then you will always have a number of people who simply cannot save, accumulate assets and savings through life course, and when they're older, they absolutely cannot going to do that for themselves, nor should they. We should not expect that. However, we've also been saying that a lot of people do still work. I mean, people at 60, you will often have a decade or, even two of different types of work that people continue doing. And there, I think, is a lot to do with eliminating discrimination. So just moving on in terms of our concept of what is old and making sure that there's access and availability for income supporting strategies, just like there are for our younger generation. So there's one issue on discrimination and inclusion, and there's another part that we do have to look at, which is public transfers.
Thank you, Epu. I'm aware that our 15-minute grace period is rapidly ending, but I'm going to turn back to both of our panelists if they could just give us one brief observation that they'd like us to leave with as we close our session. I'll start with Parul. Parul, what are your thoughts? What's something that you'd like us to take away with as we leave this webinar?
Just the importance of an ecosystem that needs to be created for the informal sector workers in terms of a pension design. So it could be a design for a pension product that is the part of the government to play. The second is importance for financial education, which is very, very an integral part. The third being access and payments systems, where people can easily use and reach out and make contributions. And fourth piece being the redressal system. All this and more focus, which is more women-centric, because I feel that women tend to be outlive men in most of the nations, or generally speaking. Especially in countries like India, rural India, women are much younger than the men, so they outlive them. They are better savers. So focus for women, and we're already working on a program which is reaching at least 10 million women by 2020 through various organizations in India and worldwide in the nations that we're working on. So focus on women is one thing that I would like people to think about, and bringing better access.
Well, Parul, these are issues that we could talk about for the rest of the day. The importance of the ecosystem, the importance of financial education, the importance of appropriate and easy channels, and grievance redressal. Certainly, these are all issues that we will continue to discuss as we move this work forward in our different organizations. Turning now to Epu. Epu, what is one thing that you'd like everybody to come away from this webinar understanding?
Oh, can I have two quickly?
Absolutely.
The one thing kind of broadly is really that in order for financial inclusion to achieve the objective of reducing poverty and inequality, it has got to understand the needs of older clients. The world has changed. The second thing, which is kind of that came through the conversation, which is wonderful, was the kind of approach to whether it is about social norms or kind of saving behavior, but the kind of nudging approach, because I think so often we talk about aging and the landscape is very apocalyptic. And number one is incorrect, and number two, it doesn't work. So looking at ways that are concrete and lead to positive action, and they may be small, but let's keep going. I think that was a really, really nice way, Parul, that you phrased that. And I think it works similarly on the whole process of policy environment on population aging.
Thank you, Epu, and that was a great way to underline something that I'm taking away from this conversation, which is that we're all at different stages of our thinking on this issue. We're all approaching it from different perspectives, and our efforts may be small, but it's important to keep going and recognizing the need to understand the needs of older people as we move forward. I think that sort of sets the context both for thinking about how to prepare people for older age, but also as that question we discussed at the very end, what can we do as we approach working with older people specifically? I'll turn it back to Sarah. Thank you again to the Microcredit Summit campaign for hosting this webinar.
Well, thank you everyone, and especially our panelists for joining us today and helping to shed a lot of light on aging and micropensions. We encourage you to keep the conversation going with Epu, Sonia, and Parul by writing comments on the related blog article on 100millionideas.org. We also encourage you to become part of our campaign, working with us to launch your own commitment to specific, measurable, and time-bound actions that help move toward the end of extreme poverty. To get started, you can visit the microcreditsummit.org website and click on Commitments. We thank you for joining us today and hope you will join us again for our next e-workshop. Thank you and have a great day.